Welcome to Talk Tickers. Meta just dropped its Q4 2025 numbers. And wow, the market's reaction told us everything we need to know. We're going to break down the results, unpack the massive new strategy, and give you our call on what happens next. Just look at that. An almost 11% jump in after-hours trading. Moves like that aren't just noise. That's the market delivering a clear verdict. And the story behind this huge surge is really fascinating. It's a mix of incredible performance right now and an absolutely enormous bet on the future. All right, so first things first, let's talk about the fundamentals. The reason that stock popped so hard right out of the gate was a super clean, decisive beat on both revenue and earnings. In this kind of market, people are looking for solid execution, and Meta absolutely delivered. Now, let's put some context around these numbers. Revenue didn't just squeak by. It blew past what analysts expected by almost $1.4 billion. That's 24% growth year over year. And on the bottom line, an 8% beat on earnings per share. That shows you just how profitable this machine is. This is the kind of core strength that gives a company permission to go out and make some really, really big bets. A headline beat is great, but for us, what really matters is what's going on under the hood. So why did they beat? Well, it won't surprise you to hear that it was all powered by Meta's core advertising engine, which is just firing on all cylinders right now. And this chart right here, this is the secret sauce. Check it out. Ad impressions, that's how many ads people saw, grew by a whopping 18%. That means engagement is massive. But here's the kicker. The average price per ad also went up by 6%, growing both your volume and your pricing at the same time. That is the textbook definition of a healthy, in-demand platform. It's the best of both worlds. And the foundation for this whole ad engine is just its mind-boggling scale. Their daily active people, or DAP, grew 7% to 3.58 billion. Let that sink in. Nearly 3.6 billion people use one of their apps every single day. That is the global audience that makes the entire business model work, and it's still growing. Okay, so the core business is an absolute cash-generating machine. We've established that. But this is where the entire narrative of the earnings call pivoted. Management basically signaled that they're taking all that cash and plowing it into one single massive bet on the future. A bet that comes with a pretty staggering price tag. First up, get ready for this. Management guided their full-year expenses for 2026 to as high as $169 billion. And if that wasn't enough, on top of that, they projected capital expenditures, that's spending on things like data centers and servers, as high as $135 billion. If you add those two together, you're looking at a potential total spend of over $300 billion for 2026 alone. This is a monumental step up in investment, and it's all aimed at one thing: building out their AI infrastructure. A spend of that magnitude forces a pretty critical question for any investor. What is the end game here? What are you trying to build? Well, management couldn't have been more clear with their answer. And there it is, straight from the top: personal superintelligence. This isn't just about making small improvements to the ad business anymore. This is a huge strategic pivot. They're trying to build a whole new class of AI products, aiming for a future where AI is this deeply integrated assistant in the daily lives of billions of people. So this brings us to the biggest question from the whole call. Why on earth would the market cheer for a plan that involves record-breaking spending that is definitely going to put pressure on their profits in the short term? Normally, a stock would get punished for that. The answer really lies in this calculation that investors are making, balancing the cost against their confidence. And here's the crucial point. Investors weighed the huge future cost against the confidence management is showing right now. So on one side of the scale, you have that massive 2026 spending plan. But on the other side, you have really strong guidance for the next quarter. And this is the most important part: a promise that absolute operating income will still grow year over year in 2026. That was the signal. It told Wall Street that the core business is so strong it can fully pay for this massive AI pivot and still deliver more profit. So what do we do with all this information? How should we think about the stock going forward? Well, that brings us to our final section, the next call, where we give you our take on the quarter and our rating. All right, here's our outlook. For Q1, we think that ad momentum is going to push the results toward the high end of their guidance. After that big pop, we expect the stock to probably trade sideways for a bit and consolidate. The next big thing to watch for will be any proof that these AI investments are actually making the ads better and paying for themselves. So the story here is really clear. The core business is a fortress, and it's funding what could be a game-changing, long-term bet on AI. For that reason, we're initiating coverage with an outperform rating.
And as always, just a final note, this content is for informational purposes only. This is not financial advice.